Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action. Jay. All right, KG, you are fresh off the Schwab Impact Conference. I saw some of your great coverage there, loved it, as you know. I'm curious to know, given some of the conversations you've had this week there, what your take and what the kind of general view is on the market recently on equities.
Yeah, I think the market right now and a lot of traders and investors are kind of focusing on this as a traditional pullback, at least for now. If you're still looking at the technical setup, Diane, it's still higher highs, higher lows at the moment. And we are actually testing some key areas of support. Now, could we go lower? Obviously, that could be the case here. You are seeing some of the risk-off sentiment taking place, especially in the crypto markets with Bitcoin breaking below 100,000. But I think the market is really thinking that this is actually very healthy. We have obviously had a really aggressive move off of the lows earlier this year, and now we're cooling off a tad bit. You are seeing some froth coming out of the market, especially when it comes to the semiconductor space and some of those stocks that in industries, if you will, that were kind of riding the coattails of the AI narrative, especially if you're looking at some of these utility stocks like Oklo. So you are seeing a traditional pullback. Volatility continues to rise to the upside, though. We are seeing vol right now, the VIX sitting at around 20.6. That's implying around a 1.3% move. But right now, this looks like a rotation. This isn't a sell everything type of pullback right now. You are seeing some strength in energy, which is obviously a little bit of a laggard all year, starting to catch a tad bit of a bid, especially the services companies there. And then healthcare. If you actually look at the healthcare sector, it's up over the last five trading sessions, even though we have seen a little bit of a pullback here. So that defensive trade is still on. There's still pockets of the market that's still gaining a little bit of traction here, especially the value names. And the value names usually is that flight to safety or flight to quality. Low beta, meaning that they have very low exposure to the S&P 500. And sometimes investors, especially institutional investors, will park some money there and try to weather the storm while we try to figure out the broader equity market as a whole. But keep your eye out on the 50-day moving average for the S&P 500. The E-mini S&P futures are pretty much testing that right now. And if we are able to hold and move higher here, that kind of gives you that higher high sequence. If we break below that, then we start talking about some really serious levels to the downside here to consider over the next couple of weeks.
Okay, let's talk a little bit about something that is grabbing headlines across, media. Tesla and Elon Musk's massive pay package. This is unprecedented, this $1 trillion pay package. There were supporters who were urging other shareholders to vote for it. It did overwhelmingly go through. There are critics who say no one should make this kind of money. What are the takeaways here?
Yeah, we did see actually this pay package getting approved here. This is going to be around $878 billion. This is after you kind of subtract out some of the cash that Elon would have to pay to the company over time. There's a little bit of a structure there, but this would make him a trillionaire if he is able to overcome some of these milestones here. This is a 10-year pay package, and there are some deliverables that he's going to have to meet in order to be able to max out this package, to say the least here. He's looking to deliver over 20 million vehicles within the next 10 years, operations of around 1 million robo-taxis, sale of 1 million humanoid robots, and up to $400 billion in core profits for the company. Those are just some of the metrics here. You are also looking at the market cap to increase to $8.5 trillion here in order for him to actually fully vest this package over time. So some pretty aggressive milestones. I think the market is kind of breathing a sigh of relief here. We did see this kind of develop over time. Remember, this is actually the result of a challenge in that Delaware court. They were going back and forth. We did see Elon kind of move the headquarters and now kind of passing this package in a different court system, if you will, if this were to be challenged by regulators. So an interesting kind of development taking place. Initially, you did see a decent little pop here, but it is trading a little bit lower here today. But we also got a couple of other news items, if you will, talking about building out a chip factory, sourcing those chips from potentially Taiwan Semiconductor as well as some other companies there, and then also exploring the opportunity to potentially look at buying some chips or purchasing some chips from Intel. That is something that is actually pushing Intel to the upside here a little bit. So not only just this pay package, but some other nuggets within the AI space that is actually catching a little bit of a bid in certain pockets of the market this morning.
Okay, speaking of chips, let's talk Nvidia. So Jensen Huang still on his, kind of somewhat of a world tour. And, basically for those who have said, okay, he's clearly trying to get back in with China, it's clear that at least right now that's not the case for Blackwell. Can you catch people up on this one?
Yeah, this is a this is an interesting story to say the least. Obviously, we had those comments from Jensen about a day ago or so talking about China could potentially surpass the U.S. And I'm paraphrasing when it comes to the AI race, if you will. Now he's kind of pulling that back a little bit. Obviously, there's no active discussions when it comes to selling Blackwell chips to China. Obviously, they have that built out within their guidance for now, and they're really kind of talking about the fact that they're still working with China in order to try to reopen maybe some of these markets. Now, obviously, that's not going to be 100% on China in order to do so. He's going to have to gain some favorability when it comes to the White House. There have been reports over the last 48 hours, Diane, that the White House actually tried to dampen down maybe some of the optimism for President Trump to talk about some of these advanced chips within that meeting that we saw about a week ago, 2 weeks ago or so here. So it seems like they're kind of stuck in a little bit of a rock and a hard place. The H20s are still available in China, but they have made mention that there is no demand for the H20 chips at this point in time here. So they're kind of, once again, in a rock and a hard place, and they're really trying to be very diplomatic. But I think Jensen's really trying to choose his words very wisely in order to not upset the White House, but also to try to gain some favorability when it comes to China. Exactly. So this is a very tough position for him right now.
It does feel like he's walking a tightrope, because you wonder if those comments were, kind of an off, sometimes you're having a conversation and a comment comes out that, is either it was a stream of conscience or not, as he's saying, not basically how he intended it. My takeaway is that he's saying, it's like watching runners in a race, right? China and the U.S., and you have to keep an eye on this runner because it's potentially catching up to the other runner or potentially set to surpass it. But, then he walked back that comment. Now, we've been watching the price action in Nvidia this week. It's under pressure. I know earlier you talked about the broadening out we're seeing. How much does it matter, the pressure that we've seen this week, or not yet?
It does matter a lot, especially when you're looking at Nvidia. Look, we had this pop to the upside last week, breaking above that $200 level. A lot of optimism when it comes to this name, but the key area of support was 200. And we were actually talking about this time last week. If we start seeing it fade down to that $200 level, it's going to drag the S&P 500 with it, if you're not seeing any other constituents really kind of catching a bid. And at that point, Meta was kind of free falling, and it still kind of is free falling at this point in time. And now you are seeing Nvidia actually breaking below this like 190, 195, 190-ish area or so. It's kind of very volatile in the pre-market trading here. That's a little bit of a concern, but coming back to that 20-day moving average, and a lot of these stocks are now testing either their 20-day or their 50-day moving average. However Nvidia goes, usually the S&P 500 goes, just because of the market weighting just in general here. We are leading up to the earnings announcement. Now, here's the thing with the announcement though, Diane, we haven't really seen really great price action post Nvidia announcements over the last couple of quarters here. So, I mean, if we have the same type of reaction, you could maybe make the case that maybe the S&P 500 is still a little bit top heavy right now, and we could pull back a little bit more. But I go back and say, trust the technicals. The technicals have been on point and been correct the whole way up here, and you have to trust them until they actually fundamentally break. We haven't seen them fundamentally break yet, even though this feels kind of like a downturn, an aggressive downturn. In the grand scheme of things, it's really not that much. It's just a correction or a little bit of a pullback here, and I think Nvidia is going to be the same.
Okay, so, and yeah, because I wanted to connect the dots on that, because I know earlier you talked about, broadening out that we're seeing in the gains in healthcare. At the same time, tech is who got us to the party in terms of the bulls, and, their weighting matters, obviously. And, some of the lighter weights, it'd be difficult to kind of keep up the overall momentum. I'm curious to know, I just want to get a quick thought from you, KG. The government shutdown, because we talked about it earlier this week, because it's now the longest on record and still no end in sight, more than 30 days now, approaching 40 days. Does it kind of matter now in the sense that it's just one more negative headwind?
Yeah, well, because the impact to the economy is starting to get exponentially accelerated, if that makes sense. I mean, the shutdown to start off the first week or 2 weeks, you did have an impact. Obviously, I don't want to belittle that by any stretch here, right. But you actually didn't feel it as a consumer as much as now a lot of consumers are feeling it. Look, we were at that Schwab Impact conference yesterday, Diane, and you started seeing United Airlines and other airline companies starting to send these messages out because DIA, or Denver International, was going to be impacted. And it was a great event. No one everyone wanted to leave, but unfortunately you did see a little bit of a rush in the middle of the day because everybody was concerned that they were not going to be able to get through the airport, through TSA. So this is going to have a meaningful impact, not only for the airline companies, but for the travel names, for the small businesses that do rely on that travel, that holiday travel here. And this is usually when we get to the last 75%, 80% of this shutdown. I would not be surprised if we do have a resolution, at least a temporary resolution, either being announced over the weekend or early next week in order to resolve this matter. Because once again, it's going to have an impact no matter if you're in rural America or if you're in downtown Chicago. It's going to have an impact here. And I think this is where it starts to ratchet up on a lot of these representatives. So is it going to have an impact when it comes to the market? It could. That being said, once we do get a resolution, that also could be a bull sign there. So keep your eye out on the airline stocks. They're a little bit heavy right now, but any type of sign that we do actually get a resolution here, they could actually rip very aggressively to the upside.
Okay, all right. So given that, let's talk about your levels to watch out for today on the S&P 500 to the upside and downside.
Yeah, to the upside, 68.50. To the downside, 67.80. Still a lot of options activity happening early on this morning here. We are in negative gamma territory, if you will. So dealers are selling in the trend that is prevailing right now, which is to the downside until we find some buyers to step in. We do have volatility a little bit elevated. This is a premium seller's market, Diane. So if you're a bull or a bear on the put side or call side, if you're selling credit spreads, this is the environment where that actually does thrive.
All right. Thank you, KG. That is our senior markets correspondent, Kevin Green. Appreciate the setup for today.